Hi, welcome to Neppy Invest. In this video of Appendix 4Cs, I'll be looking at a company that did feature on my 15 companies I'm looking forward to see how they're going to do in October 2020. That was the third video in that series of 5, so I'll leave a link at the end of the video to that video if you want to have a look. So that company is called QuickStep. I've been following this company for, it would be over 5 years now. And I've always been waiting for sort of an inflection point to buy in. They nearly reached that point in about a year ago, just over a year ago, but I didn't buy in. So still waiting for that time. It may never happen, but I'm just waiting for the signal. So let's get into it. Let's see how they did last quarter. So this is the operating cash flow. And they did receive $22.8 million in receipts from customers, and now cash flow positive to the tune of $1.4 million, which is two big ticks in my book. So I like that sort of cash receipts number. That's quite good. So they're heading for maybe $90 to $100 million in revenue, and the fact that they are cash flow positive in operations is also a tick. And as if you've been following my series, you'll know one of the things I really look for is an uptrend in cash receipts over time. And we've definitely got that with QuickStep. They have that signal bottom left to top right. Cash receipts have increased from almost $1.2 million at their low in July 2014 to around, well, over $20 million through the last 4 quarters. So definite uptrend there in cash receipts, which is a good thing. Probably the only thing management haven't done or realized yet or figured out yet is how to pare back the costs. So it seems like costs are increasing at the same rate as cash receipts. And I think once they get to the point where they become more efficient with their production and they can get cash receipts increasing at a greater rate than costs, and that means we'll see profit margins increasing. Until we get to that point, I don't think the market's really going to be interested in QuickStep. And once they get to that point, if they get to that point, that's when the market will start to become more interested, and that's when they reach that inflection point I'm waiting to see if they get to. A few details from their reports, nothing too exciting in their report. They did mention how much debt they have, net debt, cash, and term deposits. Otherwise, the only interesting thing was their outlook. So they are quite bullish in their outlook. Now, you're going to take a management's outlook with a grain of salt. I do like management teams that are very honest and straightforward and tell it as it is. So not only can they be bullish, but they can be quite bearish with the outlooks. There are quite a few management teams like this, but this management team is quite bullish about the next year or so. They're expecting revenues to increase by between 5 and 10%. And overall, this company is not that highly valued. So with a revenue of $90 to $100 million, they only have a market cap of $55 million. So price to sales is quite low. In fact, it's almost 0.5 at the moment. So next thing I'm going to look at is the charts. I'm going to look at 3-year weekly and the 1-year daily. Not much to glean from these charts. In fact, we'll say quite bearish on both of them. In fact, the 3-year weekly, if you look at the start of this period, the share price was around about 8 to 9 cents, and now it's 7.5 cents. So over the last 3 years, the share price has done nothing. The only time it's done something was in around August, September last year, where the share price went from 8 cents to 16 cents. Now, I almost did buy at that point, and then it just rose too quickly, and then I just held out, and then the share price did sort of come back, especially with COVID-19 all the way to 6 cents. That would have been maybe a good time to buy, but I just want some sort of confirmation that the company has not turned around, but has reached that inflection point. So I haven't really got that signal yet, and you can see that in the 1-year daily where it's still share price is in a downtrend from the top left to the bottom right. That's sort of definition of a downtrend when you have that signal. And over the past 3 or 4 months, we've seen that share price stay below the moving averages. There's 3 moving averages I look at. It's 100, and the 50 and the 25, or maybe it's 30. And it's just been share price below that, which is a short-term downtrend. Nothing much else to talk about here. So about a year ago is when they actually did get to their peak in share price of around 16 cents. So it's gone from 16 cents a year ago to 7.5 cents now. Probably the other thing I'll mention here is there was a sell signal right at the start of this period, so about a year ago, where we saw a massive spike in volume, which was on a down day. So there must have been some sort of news that day, and that set it forward the sort of the retractment in share price moving forward. So that's all I got in this video of Quickstep. It's a company that I've had on my watch list for maybe 7 years now, and I will continue to have on my watch list and just hope, or maybe not hope, but just keep a watch out, see if they reach that inflection point I'm always talking about. And up until then, I'm not going to be a holder. If you have any questions, leave it in the comment sections. If you are a Quickstep holder and have been one for a while, just leave your comments what you think about this company. And again, I'm not a professional advisor, so if you do need professional advice, make sure you seek out a professional. So that's all for this video. Have a good day, and I'll talk to you later.